Hello, and welcome to another EWS Super investment update. In this investment update, we take the opportunity to review markets and the fund's performance as we close another financial year. The past 12 months has been an eventful period for the global economy and for investment markets. Few foresaw Brexit at the end of last financial year, Donald Trump's presidential election in November, or the election of a relatively unheralded 39-year-old to the position of French president. Equally, few predicted the strong rise in share markets for the 12-month period to 30 June 2017. Share market rises were broad-based across developed markets and accompanied by subdued volatility. Global trade and capital investment regained momentum, business confidence indicators have improved, and unemployment rates continue to decline across major economies. US share markets continue to rise through the June quarter to finish the financial year up 17%. As shown in the chart, this brings the US share market's 5-year cumulative return to 92%. Europe, which has experienced a recent run of strong economic indicators, was up 18% for the financial year, and after 5 years of more muted returns is starting to show signs of sustainable economic growth. Japan's share market was a standout, returning 29% for the financial year. Investors responded positively to the Bank of Japan's stimulus, better inflation, global demand, and a weaker yen. Australian share markets fell by 1.6% in the June quarter, weighed down by poor performance from the Australian banks as investors digested the impact of the bank levy. But overall finished the financial year up 14%, led by strength in commodity prices, in particular iron ore, and a generally more buoyant outlook to global growth. Perhaps the most significant and less visible change during the year has been the gradual shift upwards in inflation expectations by investors from very low levels. This is an important indicator to global central banks before raising interest rates. The US Federal Reserve increased its target interest rate 3 times during the financial year to a target range of 1% to 1.25%, with markets pricing in a reasonable probability of another rate rise before the end of 2017. The majority of other major central banks in Europe, UK and Japan remained stimulatory during the financial year, but have also started to gradually reduce or consider reducing stimulus. The Reserve Bank of Australia has retained its target cash rate at 1.5% since lowering it 0.25% in August 2016 and continues to face the difficult prospect of avoiding overheating the housing market while supporting an economy that faces medium-term headwinds. The expectation of interest rate rises over the medium term resulted in significant rises in government and corporate bond yields during October 2016 and June 2017. Unsurprisingly, in this weaker environment for bond markets, global composite bond indices delivered flat returns for the financial year. The Australian dollar finished the financial year up across most major market currencies, including a 3% rise against the US dollar to 76.7 US cents. Pleasingly, there was strong positive performance across most of the EWS Super asset classes for the financial year. The light blue bar shows the 1-year returns, with the dark blue bars showing the 5-year annualised returns. Shares, property, infrastructure and credit delivered very strong absolute returns, well above long-term expected returns for those asset classes. Investment options with relatively high allocations to shares have provided stronger performance over the past 12 months, shown here in the purple columns. Our lower risk investment options have performed as expected, delivering lower returns in a more stable manner. The default growth investment option delivered 9.7% for accumulation and beneficiary account members and 11.1% for members in an income stream. Investment performance over the past 5 years, shown in the orange columns, has not been too dissimilar, as investment options with higher allocations to shares have all delivered strong performance. Pleasingly, we have also seen our investment options benefit from being well diversified across investments such as bonds, multi-asset strategies and alternative strategies, especially when share markets have been more volatile. We remain focused on diversification to ensure our members are not overly exposed to any one market or asset. It's important to remember that superannuation investing is primarily designed with a long-term time horizon, and switching between investment options based on short-term returns can materially impact the performance of your superannuation balance over the long term. EWS Super will continue to manage the fund's investments to deliver optimal retirement outcomes for our members, and we look forward to presenting to you all again soon. Thank you.